Good morning and welcome to the Breakfast Club. My name is Darren Hancock and we are here today live in the markets on October 12th, 2023. We're having a quick peek at the markets here after CPI release this morning. We did have a sharp downward drop on after the CPI report, or on the CPI report this morning. It did break off of a typical fair value gap Friday, or fair value gap on the daily. We did open up and return back into this hourly fair value gap. Excuse me. Return back to the hourly fair value gap right here with precision, and then literally opened up and dropping down. So I'm liking this on the GBP. We're looking at British pound here. I'm liking this area, the new week opening gap for the downside. We're looking for an actual entry here. Now that we've broken market structure to the downside, I'd like to see this return back into this fair value gap here to continuation on the downside, continue reaching for the lower or all these subsequent lows. Little pockets of price action down below the markets. That's British pound. Yeah, we're reaching back into this whole cluster of new week opening gaps. Back to the order block here. Top of the fair value gap on the daily. Do we find continued support off of this and then start pushing back for higher prices in euro? CAD, we've been just kind of hovering around here at the 50% mark of CAD. We're still looking for this to stay open if you want to continue to push to the upside. The bodies are still respecting this fair value gap as the hourly or the daily fair value gap, where we're still respecting that, holding that. Let me make sure this is actually the color it's supposed to be. And then we'll create another one in here, just so we have it germane with everything else we've been using. And there's a small pocket sitting in here as well. This will be an overlap. Let me get this thing out of the way here. So we've got this bouncing around inside here to do yet. On the daily, do we come back, find some support at this, the edge of the fair value gap here, inside the daily fair value gap? So you got two inside each other. Find support and continue down, or are we going to blast through this, find some support on the inside, and then start to step up, looking for these higher time frame fair value gaps inside a order block here as well. Weekly gas, we're finding that support I was looking for. Originally I was looking for it just to break through here, get some support. This was a really nice week last week. Now we're getting up and just on top of this other new week opening gap, which is where we wanted to find support. Get on that and start to drive back up and start to aim for these higher time frame weekly fair value gaps. There's an actual gap in price right in here, a small gap in price with just a little bit of wicks. On the opposite side, there's nothing but price imbalances like crazy here. So even if you trace this all the way back through time here, you got all these little pockets of weak price action up around this level here. So I like that as a big draw later on liquidity. This is a gas play that I've been calling for months. And again, in my video diary we're going to make sure we put the right date in here. Do I even have the date on the weekly? Daily. Yeah, there you go. There's the daily. Higher time frame pockets. I'm looking to get back up into here. $5.50 range, another $2 or more for natural gas. and then look for higher prices after that. I've got a big pocket of change sitting in this one. So my belief is that one's going to continue on the upside. Now we're back down into that little price imbalance we talked about a couple of days ago. I said I'd like to see it come back, find support at this, and then start to leave. On more careful review, if we actually take we got 2 more minutes before the opening. I like this. So 50% actually brings us through this one back into the rejection block. Not rejection block. Inversion fair value gap. My mouth just speaks sometimes. Words come out and I go, that's not what I'm trying to say. This is a fair value gap. We go through it, come back into it, now becomes an inversion fair value gap. So that inversion, do we find some support at it? So now we've come back down. We found support on the bottom half of it. Now I'd like to find support on the top half of it and then continue back up through this order block and then start reaching for higher prices on Australian dollar, because we still haven't broken our highs on Australian dollar daily versus New Zealand dollar. It seems to be the stronger of the two pairs. It hasn't taken out its lows in August versus Australia taking its lows out. Hasn't taken its highs out. New Zealand dollar has taken its highs out and not its lows. So that's clearly the stronger pair of the two. So if we pull back into a return here, 62% brings us right back to that. That'll be a really nice place to get on to go long. So I'm looking in here for New Zealand dollar to go long and start reaching for its highs again and try and get through these daily fair value gaps. And as usual in the morning, I have to make sure that we're on the channel. Everything's working okay up there. So anybody who pops in has an opportunity to, and we do. Bill positive, clear. Good. So we're just coming into 50% of that range. So let's look for a 62% retracement, which is a good discount range. Anywhere from 62 to 70% retracement fits that right in perfectly inside that inversion fair value gap here on New Zealand dollar on the daily. So look for that to fill October 12th. I'm calling for it down here. This is the S&P 500. We've got a break below consolidation. I'd like to see it return back into that in order to get our 2022 model, but it doesn't look like we're going to get that. If we go back into the hourly on that one, well, let's go the hourly here so we can see it a little better. So we have a fair value gap we came back through, into, and through, opened up on this hour to the top of it, and then start pulling through. So now we're looking for this inversion fair value gap on the downside on the bottom. Okay, so we're looking for further downside prices on that. I'm looking for a deeper push into the %, 62% is a full fill here. If we can get a full fill down to 62% of that range before returning. We also have the top of the midpoint of a daily fair value gap. So I'm liking further downside on the US 500 for Dow Jones, or not Dow Jones, S&P 500. Oil has come back inside that gap opening. We've rebalanced the price here. Now we're moving back into this order block and back into a fair value gap on the daily. We're hitting the edge of this fair value gap here again. So we've come back down, up, back. Do we find support at this and it rolls over and continues down? Or do we push through, come up on top of it, and then fill the rest of this daily fair value gap on oil? Are we looking for up prices or down prices? Well, right now I'd like to see this come back and find support at the top of the weekly opening gap at 83.11. So when you get down to the hourly, 83.11. Yeah, do we find support at this? Continue pushing forward. A breaking structure to the downside. Little pocket here. We're back inside the midpoint of this range. So, not sure, really can't call this one yet. Look for 50% of this consolidation. That brings us to about here. I'm going to drop some prices down on here so we can a little pocket opened up here. Breaking structure. You want this to be a consolidation breakaway, fair value gap. We did not come back in and hit it here. So do we retrace back into here? Now we've got the open. Don't know about oil. I'm not quite sure about oil. This one is we're inside the range. 62% right now. Back to old equal highs or equal lows. So we could get a retracement back into here. Or a pullback into I like to make sure the fib tool is pulled correctly first. If that is the high, 52% brings us, or 50% brings us right back into that little gap. We want to see this one remain open, so your stop loss would be sitting right below here. And we want to see it return back into at least 50% of this small range it's created. If it continues to push through, because now we've hit this order block, hold equal lows here. Do we continue pushing through for this, the top of the weekly fair value gap again? And then the reversal. In that case, if we do reach the top of that, then I'll opt trade entries down here for continuation on the upside. Yeah, it's hard to call. There's so much you can justify inside this range quite well. Look for that to go short inside the daily and the weekly fair value gaps. And gold. Gold's looking for a little tiny price imbalance down in here. So I'm looking for seeing gold continue on the downside for a little push. And yeah, I've been thinking about gold. When gold did this little run up, we're calling for lower prices. Watch that this isn't just a big Judas run in, so they've got people with the Hamas-Israel war here going on, or Palestinian-Israel war going on. People would tend to move to more safer havens like precious metals in order to protect their money, right? So in times of war, people go to the safe havens like gold and silver and precious metals. But be careful, this isn't just a Judas swing up for lower prices on the daily. Like this range that we've had here as a continuation, now that we've hit these equal lows here. Strangely enough, right off the bottom of the equal lows. Now, is this the continuation we're looking for on the next price leg? I won't know that unless we get below this. If we get below the new week opening gap, since the whole announcement of the war, if we get below that and we start to use this as a key off level to continue down, then my guess is we're going to start, we're going to continue pushing down for lower prices here. Like that would be the next price leg down into that 1700 region. So just keep your eye on this. We're calling this on October 12th. I'm not fully convinced that this isn't just a return back into the midpoint of this range to gather up more shorts or more longs to go short. They're just popping right back into that fair value gap. See that? How they just ran in there into this pocket, right into the old breaker. Is it a breaker? Yes, it is a breaker. That breaker right there, they just tagged it nicely, perfectly, and then literally pulled away from it. So that is precision. Look at the bottom of this candle. Its price is 1885.06, and the high on this candle is 1884.99. So it's literally 7 cents. 7 cents away from a perfect hit of that breaker. I don't know how much more precise you can get other than 7 cents more to hit the numbers, but hey, 7 cents could be the spread of your broker. So look for that to hold price and continue down on the gold. I'm seeing gold react off of that. I'm definitely down on gold right now, but subject to change my mind at any time. See, now this would be a nice little 2022 model here, now that we've broke market structure here. If we come back over the next hour into this little area right here, or the top of the, or the bottom of the daily fair value gap, and we hit the edge of that, we could short this with a stop loss sitting up here. We could be shorting this for down prices. Now, if you're looking to catch this on a super long run, that may be your high. Not that I'm calling highs, but there's your 2022 model in gold. So we're going to wait and see what happens here. This is going to come into that little price imbalance talked about right here. Now, do we get a reaction off of that and slowly start to drift back up over the next couple of hours, and then the continuation down for Friday? This is classic Thursday reversal. Yeah. We may not actually even get back on this. We may even break structure here with another down close candle, come back into that. I want to see this give up the ghost. I want to see this come down, find some support at this, and leave this as a breakaway gap, measuring gap, and then continue through into this low down here on the daily. Yes, okay, yeah, okay. I see this. Looking here for the hourly. Fair value gap on the hourly for a fill. We'll see what happens in the next 15 minutes. We'll get 10 o'clock. Looking for our opportunity at 10. All right, we've broken structure here again, downside. We got a little pocket of fair value gap here. We're through the weekly. Now do we key off the weekly and continue down? These two are overlapping, and these two are over. All three of them are overlapping. They're like side by side. So what I was calling earlier was like we'd like to see this downside fair value gap as a draw again. So I like to see price coming back into here, and just use these weekly fair value gaps to key off of and continue down on the downside. So we're right back to that fair value gap there. See that on the daily in euro. Now, are we going to start to find some respect off of that, start turning around and pushing back up, or are we just going to start to eat back into it? If you're really bullish on this, you really want to see this hold price here and continue up. You don't want to see it start to wick down. It's already been through it once, twice, keyed off of it here, and then continued up. Now it's turned around, come back down. I wouldn't want to see it get back into this level. I want to see it take off from here. If it doesn't, then I've got less likelihood of it supporting that, and we end up coming back into this consolidation here again. So you look for this order block here to hold price now, and then continue back down into the midpoint of this range. That's what I'm looking at for that one. I'm getting text messages. I like it. I hope it goes to 0. US CAD, that's the point we were talking about earlier. We want to see it come up into here. Now, do we get on top of this? This is the two different directions where I'd mentioned earlier. We could come back into the midpoint of this big one here, this fair value gap here on the daily. There's also this fair value gap on the daily. Are we going to get on top of that and turn that into an inversion fair value gap now that we can use to continue to running up into here, into this range, get 50% or more or an optimum trade entry on this range? Or do we just use this as a fill, that is a breakaway gap, and when we continuation on the downside for another new price leg down? That's digging into its fair value gap again. We already got above it once. We came all the way back down to it. That's the support you want. No more than that. You want to see it leave town now. But this seems to be the weaker of the two. Are we coming back into that 62% we've mentioned? Here's 50% now. We're looking for further downside. Oh, this one makes a nice colorful mess. All right, so we're already through into this daily fair value gap down here. Now we're looking for a continuation. This one I'd like to see it maintain support here. Come back up, bottom, run down. This is already a break-in market structure, so this becomes a breakaway gap. We won't even come back to that, just leave it open. Create a new one inside here. Key off of the midpoint maybe and continue down, reaching for the lower liquidity down. So keep your eye on that area there. I want to see this one hold price now. That one stay open. That hold price. Yeah. So this is the area I like to see that key off of, or even the top of that, and leave the rest of it open. We'll see what happens at 10 o'clock. We get the retracement we're looking for. I'm looking for 4380. 4378 on this. I don't know what your trading view will show you, but look for these pockets here for them to support price on the downside. Yeah, we'll see what 8 o'clock is like for me, or 10 o'clock New York time. We'll see what that's like. That's just keyed off the bottom there. I'm looking for some sort of measure of retracement here in the next, if we used 15-minute chart, for example. Mr. Fib tool here. 50%. $62% lines up with this little pocket in here. I like to see a fair value gap remain open so we can get a piece of it to trade back, even back into this order block. Gives us the top of that, or the bottom of that inversion fair value gap now. If we can get back into here around 10 o'clock ish and then create a silver bullet entry for a continuation on the downside. That's where my eye goes there. Let's see where that is. There's 62%. Or we could just keep on trucking. $7.55. British pound continuing down. Morning. Ooh, sorry, running late. How's the morning going? How'd you do yesterday? Yesterday was not a good day, my friend. Was not a good day. I got beat up a little bit yesterday. I don't mind admitting that. I let the bot run yesterday. I took a bunch of hits, and then I took I made it back in the afternoon, but I said I wasn't going to trade, but I did. I went back in the afternoon, made some of the money back, and now I'm looking for an entry here this morning, and this seems to be a bit of right before CPI numbers was a really nice entry for a short on New York or British pound, but no one's going to jump in on that trend before CPI. You're gonna have to wait. What'd you get your eyes on this morning? I missed the morning rundown. Yeah, I'm looking. I'll start over here. Looking for definitely more downside on British pound. Looking for a return back into. Is this little inversion fair value gap going to hold price? We still have more downside. If you pull back into this range here, if we're pulling into the range, looking for 50%, we have 3 overlapping new week opening gaps. We're just coming into the top of this 2-day order block. So I'm liking right in here for the downside for today, which is that old inversion fair value gap on the daily. Euro, same thing, inversion fair value gap. We've gone through it, come back through it, hit it. I didn't want to see this return to here. I wanted to see this remain bullish and start taking off. But if we do have a return to here and stop, that would be fine for a continuation. But if we start digging back down into here, this looks like a potential just to run into a consolidation for a while. This one here is the Canadian dollar on the daily. This was a return to, here's the fair value gap on the daily. We're coming to touch that. We're also inside of a fair value gap here. So do we touch this, roll over and come back down? Or do we get on top of this now and step up for reaching for this higher time frame here? Daily. So I've been calling it up this morning, but it's one of those, it could go either way. So we were looking for it to return into here. Now I'm looking for it to get on top of it, support, and continue running up into this order block here. Natural gas, that's still doing what I wanted it to do. I'll get a nice little chunk of change in here. So this is the weekly, pushed up through both weekly fair value gaps. We got on top of it, came back in, found support in there, and now we're starting to climb away. So I'd like to see it start pushing up into this higher time frame environment. Can you center MetaTrader? Can't see the top to see which time frame you're on. Which time frame I'm on? It'll say week. You can't see weekly up there. Yeah, you can see weekly. I can see weekly up there. Let me just shuffle that a little bit. How's that? Let me see if that works. You can even see a little bit of the weekly here. Let me move that down a little bit more. How's that? Get some of the white off the bottom of this, or the blue off the bottom of the screen there. That should get you more of looking at my time markers up top here. Down some more. Yeah, you should be able to see that now. There you go. I'm just looking at the delay in the video feed here, so I can see it now. So you see this here, you'll see it over here. Mike should be here on Saturday. Good. Good. Work was good for you? No issues? Everybody's behaving themselves? All the people who don't behave themselves are behaving themselves? So Monday should be able to join your Zoom. Yes, better now, thanks. Okay, yeah, Monday. That'd be great. We don't have to keep looking on the sidelines here, see if anybody's saying anything. We had one guy pop in yesterday. He just basically said, you're going to short. I was talking about GBP, shorting GBP. And he's like, you're shorting GBP? And I was trying to explain to him that it was just this rundown that I was trying to capture. I think it was in here somewhere. I was trying to capture this rundown, and I was just showing it on the 1 minute, how you could capture it. And he's like, you're going down on a... And then he left. So I was like, he must have thought I was nuts. But all I was trying to talk about was the 1 minute, just capturing an opportunity to snap a couple of pips out of there. Then it proceeded to go all the way back up, which he must have been thinking, see, I was right. Hit the daily perfectly, top of the daily fair value gap, and kaboom, we are dropping. We are dropping like a stone. Yep. More continuation on the downside. No, Zorro never did come back. Maybe he's found himself another mentor. That's fine. This is my video diary anyway. If people turn up, great. They don't. Yesterday would have been a deterrent for somebody. They would have been like, this guy doesn't know what he's talking about. What the hell's he doing? But that's okay. So I haven't been able to see any opportunity to get in here. Now we're at 8 o'clock. So looking for an opportunity to continue on the downside for this. So let's look for a now we're looking for a silver bullet entry. Okay, well, that's the silver bullet entry right there. If you're looking at 1700, if we come back into here, stop loss here, we want this to provide support if we're going to continue on the downside. For looking for shorts on GBP. Yeah, wait for a setup. This looks like if it runs up into this little pocket here or into here, stop loss goes above the new week opening gap for a short. If it pops up into here, this may be a short. Be careful, keep your powder dry. So you want to make sure you watch for breaks in market structure to the upside. We get a big bold candle in here with a fair value gap above this here. Then look for a small reversal to occur. So here we got support on the downside. We got support on the upside for this was your 1700, 1701. Created a fair value gap. Silver bullet entry. Is it the silver bullet entry though? We have another one forming here. So one side or the other side, what are you going to do? Well, we're in a downward trend. People seem to think, well, let's take that one. If you put your stop loss above the high, then you just got taken out. You'd have to run back up here to put your stop loss here. We're inside this fair value gap for support. You see how we're starting to pop above this structure here? So do we have a retracement happening here inside a small range that's been created this morning? So you got to be careful taking the first little fair value gap that you see at 1700 on my clock. Like if you take the very first one, you just got taken out if that's where you're putting your stop loss. If you're putting it way up there, then obviously you've got lots of room, but this is the guy you got to watch for. Now if a body gets through here, just the fact that you've already ran through 3 of those tells me that we've got further to go. Looking for shorts on oh, there's Zoro. How's it going, buddy? Good morning. So now we've got a body above this. So now we have a break in structure. We have a little fair value gap. Do we come back into here? Now this becomes the breakaway gap. Now these equal highs. A little fair value gap forms in here. Now, is this the retracement we're looking for? So there's the 10 o'clock. Do you know about market imbalances? It's kind of a vague question, my friend. Do I know about market imbalances? Yes, I do. I know about price imbalances, like little tiny areas like this. This is called a price imbalance right here, when there's not a body that supports price on either side. That's an imbalance in price. This is a fair value gap, so here's your entry here to go long. We've got a body just barely getting above that, so your stop loss would go down in here. You want to see this, or at least below this one here. You want to see it stay open. I don't want to see a body or it come back through here. Thanks for having me. Buddy, you are welcome anytime you like. You are welcome anytime. This is a place to explore. This is a place to just chill, relax, and just kind of read the markets as we go. So keep your eye on this area here. Now we've got this little This would, to me, would be a silver bullet entry there. Stop loss. I'd make sure the stop losses. We don't want to see this bigger one lost, and I don't want to see it break below. A wick can get down in there, but I don't want to see a body close below this level here. We're still inside this bigger one right here, from here to here. So I guess you would have to put your stop loss right there, below the bottom of that one. Because the more you eat into this one, the less likelihood it provides some strength in my eyes. So let's take a long right here. Oops. Just for shits and giggles, I want to try and prove my theory out here. Now, this is not encouraging you, Zoro, to take any trades or anything like that. It's just, I'm trying to just demonstrate a possible trade entry that supports a theory that I'm going with, that's all. And I'm going to scale out right above here and above here, because it's the first swing high. I always take out at swing highs. And my next objective is, well, actually, my next objective would be the midpoint of this, the open midpoint high. You take off 10, 20, 30, 40%. You're just trying to grab little pockets of support. From what I've watched, the large candlestick to the left would be the imbalance. Large candlestick to the left would be the imbalance. Oh, let me just take a little piece off of here. I'm going to take 0.2. Close. Feed the wolf. Feed the wolf. Oh, let's take another one. Oh, look at that. Feed the wolf again. Oops, I don't want to go 1.6. I just want to go 1. I want to go 0.2. Oh my goodness, look at this. $500 already. Now I'm going to move this sucker right here. Now it's a zero stress trade. Oh, now we're going to take a bit more out of here. Jeepers, I can't even 0.2. As soon as it takes that high there, we'll take some more out. Well, there, my goodness, look at this. We keep trying to take out all our money here. 0.2, 0.2. Take out another 10%. Are you catching this? Are you catching this silver bullet? This was just following the basic rules that I'd mentioned earlier about finding profitability around a set of rules that support price. Break in structure. We have a body breakthrough that tells me it's got more upside. I'm looking for this old high here. Now, the top of that, I don't want to see. Now we've broken this order block here. I want to see this one stay open here too. Or at least the midpoint of it. We're going to take, I should have put my bot on here and let it do all this. Oh, feed the wolf. Feed the wolf. So we've got half of our trade off already. Up 205% on the live account. You go, brother, you go. Going to play ultra safe until I get the refund. Yeah. Now I want to see this midpoint stay open here. If it comes back further, I'm out. I'll just take it out there. This is right on the midpoint now. You want to see it continue on the upside. 205%. Or $205 on the live account. This is what you're up, not 205%. Was it 205% already? Holy crap, man. Good for you. So there's the support. Now you want to see it keep pushing up to the upside. You want to see this remain open. So that was an example of 493 bucks trade. So hopefully, Zoro, you got to see it. Got to learn a little something there. I know you're just starting out, but you'll see these setups when they occur. Eventually, you stick around long enough. I'll show you what it is I'm looking for. And they become pretty reliable. And you got to stick to your rules, even though I said, well, the midpoint here, and it just popped below it a little bit. That was my rule to get out, so get out. Even though the wicks can do the damage, it's the bodies, I should have said. I don't want to see that thing close in, though. We just had a stop run here. Now, if this closes in, do we have further continuation on the downside? Which is what you're looking for, right? We've just come back to the edge of that fair value gap. I think that's an hourly one. Now this doesn't, what I just showed you here doesn't mean you're going to pick a low. Also, just to confirm, where are you talking profit bit by bit? Where are you talking profit bit by bit? Yeah, that's just, you nibble out, you've got to nibble out at PD arrays. Now you saw me taking profit, like a whole bunch of, like half of it was off, but that's because I broke first one there, 10%. As soon as you break that high, I move to break even. So 10%, 20%, 30%, 40%, 50%, and then if it comes back into here, close it off. So I'm looking at specific PD arrays. If it breaks them, I take a small portion out, because this is scalping, like a really tight scalping, because the overall trend could continue on the downside. So we just captured something, a buy inside a sell, overall bias to a low. So that's like doubly dangerous. If you get caught on the wrong side of that, you get beat up. So you got to look for specific PD arrays. Don't go shooting for stars up here. If you're looking to just get a chunk off here, then that's how you kind of capture something real quick and easy. But nibble, nibble, nibble. This is how our friend here down in New Jersey, that's how he made his funded account. You got to nibble away at it until you find profitability. And this is exactly what he's done. So now, see how we've got the bodies respecting this fair value gap there? So I'm happy the fact that I got out right there. Even though it went back up a little bit, I'm still happy I got out there. Whereabouts are you from, Zero? Are you in the States or are you somewhere else in the world? I took small profits over the course of a month to get funded. Yeah, that's exactly what he did. Order block now. Break down. This order block becomes valid the moment we break below it right there. So now we look for bottom, open, threshold, also the top of this candle here. So the threshold also lines up with the bottom of this order block here. Does that provide a level of support? Now do we continue down? We're still inside this fair value gap here on the 1 minute. So that was a quick from here, wherever our entry was, right here. So from there to there is 6 handles. Not a lot, but it's the 5 handles that Michael was talking about. If you're just starting out, we just nibbled 5 handles out of the market. Put close up pretty quick on this trade as well, but now it's live and $205 in my pocket. I'm not able to withdraw it until November 1st, so I'll take small profits each day. Good for you. Once I get funded, I'll hold trades longer to maximize profits, but till then, I'm still nibbling my way along. Don't change it, man. Nibble $200 a day. How many hours is that of work for you? It's about half hour for a corrections officer. You guys get paid what, $200-300 an hour down there? So you should probably be, that's probably got an hour's work for you. It's a good deal. $200 or $300 an hour. He's laughing. He's like, "Are you on crack, brother? There's no way I get paid $200 an hour. If it was, I'd move to New Jersey and become a corrections officer as well." So look for this here now. That is that we're sitting inside this consolidation, or consolidating inside this 1 minute fair value gap. Actually, I'm in Jersey. We get paid a nice amount. My base salary is, wow, that's surprising. Good for you. Crap, man. You get paid way more than the average paramedic down there. Way more than them. Unless wages have changed in the last 20 years. That's a good base salary, man. Mind you, you're putting your life on the line. You're dealing with the creme de la creme of crap in the community, right? So I always say it's never enough. They never pay me enough when I was firefighting paramedic stuff out there on the highway, and I'm standing there with a little steel sign saying slow down, and there's a 70,000-pound semi sliding down the road at me, jackknifing as it slides down the highway on our icy roads, and all I've got is a little sign saying slow down. You can't pay me enough. My life is worth way more than whatever I negotiate in wages every year. So it always boggles my mind when you get councils go, "You guys ask for too much." It's like, yeah, you run into a burning building when everybody else is running out. You stand on the side of the highway when everybody's sliding into the ditch, trying to pull a body out while somebody's desperately clinging to life. And you tell me if it's worth it to you at 30 below. It's nuts. That's a very, very good way to look about, take a bit more than you'd usually make in a day, and working 9 to 5. You shouldn't get greedy that's right. Don't let greed overcome you, man. In New Jersey, we're actually officers. One of the few states in the county that are equal to police officers. Oh, excellent. Good for you. Most states, they are just guards and get paid the same amount as mall security guards. Wow. Look how volatile that is in the tech. Woo! Did that ever reverse? That dropped all the way down into, we have a breakaway. Here's your breaking market structure to the upside, consolidation. We pop above, there's your fair value gap. You run back in, you tag the top of your consolidation all the way back to the top of this mitigation block. And that's a mitigation block because it's the last up close candle that did not break an old low. So that's mitigation. We came all the way back to mitigate off the top of the order block. Inside this fair value gap, which is also a breakaway gap, measuring gap, and off she goes. So we came back down into that. Look at the range that we look at here. This is the range. So I love the Mr. Fib tool here. Ah, interesting. Didn't even come back to 50%. But if we pull it from the body and body, look what happens. Body to body, 50% puts us right on that. So that's what we were talking about last time, Kevin. Remember we were mentioning about, do you pull it from the body or from the wick? Michael taught us to do it from the wick or from the bodies. The wicks are a bit more vague, but the bodies are the best ways he taught us in our mentorship. And there you get to see it. Look at the 5-minute chart. Crazy movement. Whew. Did we come back? And look at that right at 10 o'clock, right? There's 6:15, 16:55. There's 7 o'clock, 10 o'clock open right there. So all those people who thought they were going down, we suddenly had a breakaway. Now go to the 1 minute and look for this. This is what I want you to see. So there's 7 o'clock right there. 6, 7 o'clock. There's your silver bullet entry. If you're looking at the 7:01, you come back in, fill it. Stop loss goes down here. If this spread didn't take you out, you lucked out. And then you got in on a nice big run above 1, 2, 3 highs. You wouldn't have got that one, and you would have got this one here had you taken that as your break-in market structure to the upside, fair value gap, hit it, and run up, aiming for whatever you're looking for back here. Now we have another return at 1712. There's 1711, 1712. Reversal, like right on the 12. Boom. Now we got a different setup, right? Fair value, you come into it. Now, where do you go inside here? So you're stuck inside this one right now. Do we continue running up, or do we come back all the way through here and rebalance this whole range here? Crazy. Euro hit it. That's good. We want to see that pull off of there now. S&P 500. So that was the market structure break we just saw. We caught on that. It came back down. The bodies are respecting inside that fair value gap. You see that? And now we've come above it with a body. We've come back in, just tagged inside it. Now we're starting to leave it again. So too much consolidation for my liking. I like these nice clean ones like this. When you start getting into sloppy chop like this, especially near this half hour, you want to see this go 27 all the way up into here now. Boom, hit that. We're inside that one now. You start to see this in here. That's the upside objective. If I still had more on there, you'd be looking for an exit right there. You were taking a big chunk off right there. Also inside here. So that would have been, had that held price and I was still in that, I would have taken out a portion there. So that would have been 60%, 70%, 80%, and you leave 20% on for a run above these highs if you want. Now, does this provide support right here? And then continue further on the upside. Equal highs. Back into this fair value gap here. Eating through that now. So we just reached for that rejection block. Sorry, not rejection block. That inversion fair value gap. No, it's not an inversion fair value gap. It's a SIBI that we did not come back up and fill and come back through. So let me get this straight. This is a SIBI. It is not a filled SIBI, and it is not an inversion fair value gap. We just came back, just tagged the edge of it, ran into it a little bit, and now we're continuing away. So now this is downside. Now I want to see this break-in structure here with a body, fair value gap, come back up inside, breaker inside of a fair value gap. This is a short. This is a time to get short. But I want to see something. I want to see a big bold candle come down here, create a fair value gap on the next minute, stop loss here, inside here, go short. So there's one candle. So the next 1 minute candle after this is what I want to see. Now we've got this fair value gap forming. Now because it's so close, I want to see it come back. Ideally you want to see this stay open here, but I like this breaker inside here, so I'll take this right here. It's kind of a little consolidation, but so far it's forming exactly what I want, which is that fair value gap there. Now done, good. Now come back into the second one, and I'll go short right there. Stop loss goes here, and I'm going to cut my trade in half. Tag in for one pipette and then melt. So that's their first one. I want to see it come into the second one though. I want to see it hit right in here. And if it doesn't happen, then that's the breaker right there. That could be all you need to get short. But I wanted this here, so I don't get it, I don't get it. No big deal. So hopefully, Zorro, you're starting to see how you can even call the candles before they happen of what it is you're looking for. So we called this, we wanted this fair value gap to form. You can come back in and take it. I wanted this one, but that is a legitimate entry here, here, and here, and here, here, and here. Stop loss goes there. You scale out a little bit right there. It's 3 handles. Come back up into order block now. This could still run back up into here yet. If we start to really push through this bottom half here, and we start digging into this little bissy here, then that was the better entry. But I wanted this. Don't count it out yet. We could still get the return there before we start running for the low. Midpoint, threshold, order block, equal lows, come back up, get this, then run the equal lows. And again, the same rule is if a body starts to break through this, then I'm out. Let's just hit the rejection block, which is right there. With precision. Do we just build more book here and then start going back up again? Inside this, see how we're all just kind of holding on this BISI here. Hasn't been filled yet, so it's coming down. Find support, 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 support. All the support here. Yeah, there is about an 8-second delay in it. So when I'm pointing, I'm still looking up here. So 8 seconds from now, if you finally see this, I'm looking up here. So definitely keep an eye on your live chart. And you'll see, hopefully me explain 8 seconds later that I'm still looking for this range up above in here. This is just building book on both sides, on this sell side now, or the buy side. So we're looking for buy stops are all sitting down in here. I suppose if you're on the 1 second chart, you could say, wow, we could be, oh, here we go. Come on up now. Come on up now. If this was a 1 second chart, it'd be annoying because you could be like 8 PD arrays behind. So 1 minute is a sizable chunk of your time taken away. So I still didn't get it. I was, what, a couple of pipettes short there? I still didn't get what I want. I'm going to wait. If I don't get it, I don't care. Yeah. So we're staying inside this guy here. That's the one you want to stay open, but you want to just come back and clip the edge of it. If it fills it, not such a good thing. Here's excellent, there's not so good, there's worse, and if you get a body that closes above it, close out before it reaches your high. That's my rule anyway. See how much they're booking on the sell side here? All this is buy side. All right on top of that inversion. That will totally give way. I think we're between here and here now. Look at that, 62% just banging off of that. Bodies are respecting it quite nicely. So, very, very cool. One more time. Come on, run up here. Did you answer that question, Zora? Whereabouts are you from? Are you in the United States as well? You don't have to give me your town and street address and phone number stuff. You just what part of the world are you in? Are you closer to New York time? Yeah, it does look like lunch hours. But you see how we're sitting here gathering up orders right now. They're building this whole long side right here. People who want this to reverse, they think this is a reversal pattern. We just capitalized on a little chunk of change in there, but that does not necessarily, this could be the Judas run, building book, and then all of a sudden come back up. All these people think are going long now. And think about this, we've got lots sitting up here, and we've got lots sitting down here now. You see how that's all kind of fair value gap up there. So even if we ran through this, and I want to see if that is true, do we find support at that and come back down and take this out? Or do we run all the way through the midpoint of this, get a body on top of that, then we're aiming for this, all this liquidity sitting above the market. So from here to here is 11 handles. That's it. Yep, mentioned before, but I'm way further away. Well, UK. Oh, I was born in the UK, man. I was born in Portsmouth, mate. Portsmouth, Pompey. That's me. I came over a long time ago, though. But I could pull it out for you if you like. It's not a problem. I can pull out my accent when I need it. Yeah, you're from the UK. Good for you, man. My brother in England. Yeah, I came over in 73, and I'm 58 now, so it's been a long time for me, but I go back a lot. Got my fam over there. Mom and dad and that are still here, but all my cousins and stuff are still back over there. No way, what a surprise. Right, mate, yeah. Are you Northern England, Southern England? What part? Go and tell me you're from Pompey. But I'm an Arsenal fan. I know the Cannons. I'm not a super Pompey supporter. I'm definitely Arsenal. I had a little Arsenal cup when I was a kid. Here we're going to run this lows. Now we're running that liquidity. Look in here now. You've pulled off a good accent. Well, thanks. It's inbred in me, innit? It's part of me DNA, it is. Yeah, see, that little pocket right there. So many pipettes we could have been in that. This is going to annoy the shit out of me now. Look at that. Our high was 76.29. The high on this candle was 76.54. So we're a couple of pipettes away, 20 cents away from actually nailing that trade, and then start scaling out portions here, 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 here. Man, those have all been beautiful little executions. But Southern England. Oh, you're from the south. Right. Southerner. That's good. Well, welcome, my fellow Brit. Look at that. See, here's an example, guys. This is an example of watching precision and scaling out Canada. Oh, I'm from Canada. It's like saying to an Aussie, oh, are you from England? And they get all offended. No, I'm from Australia. Right? No offense to my New Jersey friend, but Canadians hate to be called Americans. But we're from Canada. Good old Alberta, Canada. I'm in the mountains. So back to this. This is a good example right now. Had we taken this trade here and we managed to get in, so now they've run all this liquidity out. They want to pair this up. They filled this fair value gap here. Now they want to pair that up with upside stuff. So look for this as your upside objective now. This is a good example. Had we got in on this trade right here and we would have started scaling out 10% down here, 20%, well, 10% down there, then 20% close of this thing, then 30% the open of that one, 40%, 50%. We'd had 50% of our trade off. We would have moved to break even or a little portion above break even, and we would have been taken out right there. So you would have scaled out a whole bunch of your money by the time you got down to here. And this quick reversal, you want to see this stay open to continue on the downside, and it didn't. It ran right through it. So we would have been out, but we would have scaled out another $400 or more out of that trade, just scaling out chunks down. That's why scalping, you got to be careful in scalping, and you got to know your PD arrays. Oh, you ran downstairs, and that's okay. That's all right. These things are happening all the time. So does this now form a breakaway gap? That right there. Too much consolidation, but I wouldn't take this, but I'm looking for this to stay open now. I don't want to see this close in. I want to see that stay open. Pop into here or just below it, and then start running up for all this up here. New phone delivered, so missed the run down and then run back up. That's okay. So basically we're looking for, we're like 20 cents away from our entry there. We didn't get it, but we would have scaled out portions here at this midpoint, close, high, midpoint, close, would have given you an absolute bang on additional 10% for the a full run from there would have been precision, absolute precision. From there to there would have been another 9 handles. So you would have scaled out 50% of your trade would have been scaled out by here. The rest would have been moved to break even, and you would have broke even. So you would have still hauled a few $100 out of that, even with one lot. So hopefully, Zorro, you can start to see the precision, which you can call a market. And there's, with all this crap that's going on in the market right now, PD array to PD array. I tell you, if you understand PD array complex, you see how precise we're calling this on a 1 minute. Most people look at this and go, it's just chaos. There's nothing random. There's nothing organized to this whatsoever. But we've been calling this like with laser precision. We've been even telling what freaking setups we want to call. So hopefully you can see how just like beautiful, accurate that is. The high on this candle right here was 67.04. The low on this candle, 67.04. How precise do you need it to be? Now, with all the fundamental talk that's going on inside the market right now, and people, all the talking bubbleheads going back and forth saying about the markets are this and the markets are doing that, and they will never give you enter or exit your trade right there at that time, because in that board meeting that guy said the right thing, which turned the market around to start moving back up the other way. This is, if you can't see that this is not precise, algorithmically delivered price action, then you need to go back and analyze it some more, because it's super precise. So we wanted this to stay open, and now we want to push for upside, because there's a whole bunch of delivery up here now. There's a lot of liquidity sitting here inside this pocket, and then looking for the higher time frame run. So this range from here to here, you're sitting around the 50% mark. So I didn't want to see that come back in there. You want to see it stay open, at least 50% of that thing. Leave that piece open. If it closes, again, we could be looking for a run back down into here. This order block's been validated now, so there's a little tiny price imbalance right here. It loses its luster for me if it starts to, a body starts to drop below here. We get a body in there, then we're bashing around inside this whole range here again. So it's still staying open. Back to a price imbalance. There's a little tiny price imbalance right here. Look at that. Order block. We're staying inside that order block, even though we did run through the threshold with the wick. The bodies are still respecting the body. That body respects that body's open. Wicks do damage. So now the next PD array is this guy here. Think about the threshold of this candle, down close candle. We ran this high, so this becomes the breaker. Last down close candle before a run above a high. So we have a low, high, lower low, higher high. So last down to close candle before a run above a high, breaker. We want to see the threshold of this breaker is the last line in the sand for bullishness. If we start to close below that, we start to get inside this bigger consolidation or this bigger fair value gap, then waffling around, and we're in what portion of that. So here's some extra stuff you need to, a million things you got to kind of keep in your mind, but when you've been doing it long enough, you'll start to see. Look at this consolidation, or sorry, look at this fair value gap. We have, you take a fair value gap and you break it into 25%. See this 25% here? 50%, look at all that 50% right there. 75%. See how these pockets start to get price banging around at these 75% range, 50% range, 25% range. And you say, okay, well, those are areas of sensitivity inside of a fair value gap. That's how you break it down into four more sections. So kind of keep those things in mind when you're looking at how price is supported and what PD arrays sit inside those to support the price to continue here on the downside. So now we've got through this. We didn't want to see it break down, and it did. It did not take out the old high, but it did take out that little high there. Still got lots of liquidity sitting up here now. Like we were building here, we were building buy side liquidity. Now we're going to build sell side liquidity. So now we've ran out the buy side, and now we're going to run out the sell side liquidity up here. Again, you still got a big pocket of candy land up here. So does this little price imbalance hold price? Watch right here. Watch the bodies. We've seen how we've dipped into that price imbalance with precision. The close of this candle is 71.04. The low of this candle right now, 71.04. Precision. Rebalance that little price. Now look for a run up. There's a lot of wicks inside here. You can't see them very well. But we have this order block here now. So there to here, here, threshold, and then these equal highs. And we've come down to near the midpoint or threshold of this down close candle or breaker. It's come back to a logical area of imbalance. Now we want to see it start to push away. Now we're into this one. It's like we told it what to do, hey? See that, Zorro? Man, you'll see this precision. I'll just run for up here. Now we got through now we hit the threshold. Bodies are respecting it. Wick do a little bit of damage. See that? Right on the threshold of that order block. Now it could come all the way back down again, and we can consider this consolidation crap as we continue to build more here, or we're going to start running up above it. I'll be cutting out a little earlier today, guys. I take my father-in-law to the airport. He's here visiting us, so I'll be cutting out a little earlier today. So hopefully you guys got something today. We got a little bit of price action. We made a little couple of shekels, and price is done. There you go, bing. Just tag the top of that. See, now this is called price delivery. Perfect. You're looking for a PD array to PD array, you guys. The more you start to study the PD array matrix, and that is one of the greatest things you can study out of all his stuff, is the PD array matrix. When you understand them, and you understand ranges, and you understand 50%, 62%. Look, if you even just take this range here. I don't know. I'm Mr. Fib crazy guy here. I'm going to get a license plate that says Fib 162. That's going to be my license plate, I think. Look at that. 50%. What at 50% of this small little range sits there? There might be a PD array that you could get a piece of action on. Well, we have a midpoint We also have this little tiny price imbalance. We can get in on there, running up for the liquidity sitting right there. It's like we told it what to do with precision. That one we were in with no pipettes out, man. We nailed it. With these PD arrays you've mentioned, is there a particular method strategy that utilizes these PD arrays? ICT, yeah. ICT talks about the algorithm will look for PD arrays that are in the premium range. So in other words, like I just showed you here, here's a good example. If we look at this range here, you split that range in half, that's 50% right there. That is called premium, and this is called discount. So when you're looking at PD arrays, you look for PD arrays inside that range that look for when price makes a reversal, that you say, all right, now when price makes a reversal, it's going to reach for a discount that they can sell at a higher price. So I want to sell at a premium and then buy it back at a discount. Then I want to buy it at a discount and sell it at a premium. So we always want to look at price as the algorithm's always reaching for liquidity on the premium side and the discount side. So the discount side, anything is lower than 50% is discount. So you start to say, well, if this is my range, what PD arrays sit inside here? Well, there's fair value gaps here, fair value gaps here, fair value gaps here. So if you're looking at that range, you start to say, what would provide me a nice little area of discount that I could get to send prices higher? Or what could I reach for up here? If this is the big range, what was there reaching for up here that could provide me a discount further down? So if I sell it at a higher price and then buy it back at a lower price, I'm going to make money there. So always look for ranges and look for premium and discount, and then the arrays that you're looking for could be fair value gaps, they could be breakers, they could be mitigation blocks, they could be rejection blocks, highs, lows. Just go study the PD array matrix on Michael's core content. Don't just jump to that. Study all his core content. And if you can get on with Michael now, don't waste your time with me. Spend time with the master. Spend time with the guy who's actually from the horse's mouth. He's the guy that showed me how to do all this stuff, and I knew nothing. Zero. I kid you not, nothing. And now I can read price pretty damn good, like right to precision here, and say what would you expect it. Now that's not 100% all the time, but we're getting pretty freaking accurate. So look at that right there, boom, and we just got a couple of little pipettes above, but that's the one we were calling for earlier. Run up there. But because this had already ran out my run, this is why I'm not taking this. It already ran out my arrays that I would sell it for as at a discount down here already. So now we've got a smaller range. So anyway, you're looking for premium and discount. When you understand the array matrix and you understand what arrays it's reaching for, and then when you start to break each one of those arrays up into smaller boxes, this would be broken down into 4 different ones inside here. And this PD array matrix, in terms of the premium and discount, goes all the way down into seconds. So everything's fractal. So depending on what time frame you're on, it gets really complex. But once you see the pattern, you see the arrays, you can see them pretty clearly. And does that help? Did I explain that clear enough? So you see how it extends beyond. When it breaks out, it consolidates and it runs out of the array. So if I'm between this guy here, the moment I break that high, that becomes an order block. So I'm into, when I come back to it, I run to the top, the open, the middle or threshold, rejection block, And then the wick is also divided into a whole bunch of different arrays. And then the low. So if you were actually keying off of this order block, you went up, came back down, and you put your buy in there to aim for the previous candle's high, you'd go here. Your stop loss would go at the very bottom. Now, if this spread was perfect and didn't take you out, you'd come all the way down into the rejection block, push all the way back up, and then you finally break your high there, and you would scale out there. If you're looking at order, I know it seems like a pretty shitty kind of example, but you'll see that order blocks are validated when you get above them. Start with that. That's the basic order block theory of understanding how these orders are placed in the market. Yeah, I followed. Okay, good. With this model, I've heard of the 79% rule. Yeah, that's a 79% retracement. But we also have the optimum trade entry, which is, in other words, if you look for here, for example, there's 79%. That's the 79 rule, 79%. So 79% retracement. But the rule is optimum trade entries. That's why I have OTE put on my fib tool. I put in the levels that I'm looking for. I put in the 25, 50, 75, and 100 levels to split fair value gaps up and gaps and all that other stuff up. I also have the 62% retracement, which is a common area for retracement too, as a premium or discount, depending on what end you pull to. And then you have 70% optimum trade entry. This is the institutional order flow entry drill. When you get 75% optimum trade entry, 79%, and then you pull away and start moving in the opposite direction. So that's the 79% rule you're hearing about, but doesn't always reach 79%. You're lucky if it does. It's great because it's a really good deep discount to grab a premium and sell it at a lower price further down. But you'll see that range does not always work. For example, if I pull from here to here, from there to there, 79%, 70% optimum trade entry, pull away. And what are you reaching for? That's the 79% of that range. Then you say, okay, now what range do I recently popped out of here? The swing points, high to low. Low to high, that's the swing, smaller range, and you dipped all the way down into past 79%. We went right down into here. So if your entry was right there, excuse me, if your entry was right here, you would have been underwater a little bit, stop loss here, excuse me, and then you're looking for a run back up into order block. Fair value gap, order block, threshold, rejection block, then 25%, 50%, 100% of the wick. PD rate range, PD rate to PD rate. What's down here? There's a fair value gap. What am I reaching for? 79% retracement, 75% retracement, optimum trade entry, and you're running back up to next area right there. So these PD rays get smaller and smaller and smaller until they compress, and then they have to blow out. They run them out because you start to get them overlapped, like this order block here and that order block there. They overlap each other till it gets to the point where you've run out of that guy and you've run out of this guy, so now we have to extend the range. Does that make sense? MetaTrader question. Well, when the take profit or stop loss turn green, red, what's that mean? It's within 10 pips of take profit or stop loss. Oh, when it turns green down in here? Yeah, when this turns green or red, that means it's coming close to taking you out, or taking green, coming close to taking your profit. and it's within so many pips. I don't know exactly how it is, but it's within so many pips of closing out your trade. So you're getting closer. So it'll flash green to let you know, or flash red to let you know that you're about to get your stop taken. Yeah, at least that's what I think, and I've noticed, but not 100% because I usually close position before. Yeah, that's what it is. No, that's fine. You close it whenever you need to, but bless you since you keep sneezing. Thank you. Okay, that's what I thought. Seems like 10 pips to me. Yeah, it could be. It all depends on what you're in. So this is more handles than pips. So you see how it's come back in, filled that little fair value gap down there. Now we're reaching for a higher time frame because we're already through. We've eaten this one up already. Now we're looking to extend our range. Now you're looking for body, which is right here. So that could be one of those little boop, pop above it, and then start running back down again. One of those 1 pipette, 2 pipette runs into that area there. Right there. See how it stopped on it? Popped off of it. It could start running through it now. But you see how it hits it? On the lower 1 second arrays, it's going PD array. It's doing this. Up and down, up and down, up and down. It hit that PD array and then ran down to a 1 second array, then ran back up to another one, and now it's going to extend it further, or is it hold it right there off that order block? So you see how it hit it? Now you can't tell me that's not precision. Just as I'm talking about it, it does it. It hits right off of it, right on that point there, pops off, came back into here. On the 1 second, we're in a 1 minute chart here. So that 1 second came down to a discount, and now it's pushing back up, extending the array to a higher time frame spot. So hopefully you saw how sensitive that was. It hit it, came back a little bit. You saw that bobbing around. Well, that was what the 1 second chart was, running back down to a lower PD array and pushing through for a higher one. Everything's fractal for a reason, man. Everything's fractal for a reason. Little price imbalance right here. Look at that. Come all the way over. Now, some people say, oh, you're just form fitting it, Darren. You're just coming back. So equal highs. These don't have areas of sensitivity, eh? Boom. High, high, high. Why? Oh, there's a little tiny PD array in there with absolute precision. There's a PD array in there. It hit it, came back. It's wiggling around in the 1 second one now. Coming back inside the little smaller one right here. Price imbalance, came right back into it with precision. That candle's close is 77.04. This candle's low, 77.04. Precision. Little tiny imbalance. Now it's extending the PD arrays. Now it's hit the top of the 1 hour. I think this is 1 hour. I keep calling it one like it's a 1 hour. Yeah, it's a 1 hour. 1 hour fair value gap. So now, are we going to work on top of it? Now I'm going to start to push up for the higher time frame stuff we've been calling for a little bit now. Does all this make sense? Zora, you're probably looking at what, 7 hours? You're probably looking at 3 o'clock in the afternoon, 4 o'clock in the afternoon over there, ain't you? I think it's about 4 in the afternoon there. Yeah, look for a run above these highs for lunch, and then they run back into extending the lower position. If we run these highs out here, do we continue to the upside, or are we going to turn around and continue down, looking for further downside after lunch? But that's pretty much it for me, guys. Thanks for popping by. Hopefully you got to learn a little something about the arrays again and how precise they can be, and how accurate you can call it. We made a little bit of money today, which is good. And yeah, thanks for coming by. And Zoro, thanks again for popping in, man. Yep, 4 p.m. over here. Yep. Excelente. So pop in again tomorrow, Zoro, for your lunch hour special, or your after lunch special. Are you working? 4 p.m. You'd be working still. I won't tell your boss what you're up to. Crazy accurate. Love the crazy accurate. Anyway, hit a like on the like button, because I know it's only 2 of you, but if I've never got more than 1 like, I think. So hit a couple of likes, and I'll see you guys tomorrow. Thanks a lot for popping up. And my name's Darren Hancock. Thanks very much for popping in for the Breakfast Club. And get your mics, guys, and let's get chatting, so you don't have to sit here and type in all day. We can actually have a little chat live on the stream. So Zora, if you can get yourself a mic and you want to pop in on the Zoom call or the Skype call. What do I use? I use Skype, yeah. A Skype call. You can sit and have a chat with us in the morning as well. With that, thanks again for popping in, and I appreciate your time listening. I know there's lots of people out there. Be safe out there, guys. It's a world full of hate. If you see some love, spread their love around, man. Hug your fellow man. Take care of each other out there, and pay it forward. If you're making some money, you're living life large, help the less fortunate, and let's stem the flow of hate that's out there. Keep the message alive. Take care, you guys. We'll see you again tomorrow.